Hi there, and welcome to the channel. Yeah, good to be back. I haven't posted for quite a while actually. Yeah, I haven't been posting videos. Sort of enjoying the Christmas and New Year off and stuff, and still working obviously. But yeah, I said to myself, I must just get back into making some videos, and yeah. So if you'd like to see, I'm actually going to talk about a few things today. So keep posted. I will keep you up to date with the happenings and the comings and goings. So if you look at the macroeconomics of the American market, the American market has they come out with a jobs report which was up, and it come out afterwards that the jobs were up, but most of it was part-time jobs and stuff like that. So they actually said when you look at the permanent jobs actually were down. So now that was the reason why they say inflation is going to go up and the interest rates are not going to come down as they expected. They're going to come down less, or they're going to stay the same, or possibly even go up. Um, I think I think when other data comes out, there is still room for rate cuts in the US. So we'll see what happens. Um, in South Africa, I see we've got a lot of room for rate cuts. I mean, basically, America and South Africa, we only just started the cutting cycle. Our rates are obviously a lot higher this side, the South African side, so there is a lot more room to cut. And yeah, so let's see what happens. Yeah, America had I think our decision is coming this month. Yeah, this month or February. And and the next thing I want to talk about is the markets in general. So the South African market and the American market hasn't had a good start to the year. What actually happened? America was actually the S&P 500 was down in December, and it started up the first day, and then it was down the second day, and then down again. So it's very, very volatile. And obviously, when the news came out with the about the potential rate cuts, then obviously the markets fell a couple of percent. Um, yeah, but so what's the outlook then for 2025? Most analysts are actually looking at a good 2025 for local and American markets. If you put everything together, but the big kicker will come with the company's earnings. So a lot of companies have their year end in December. Yeah, you get some that have in June. Nvidia's is in January, but most companies have in December. So now this time of year, when it gets towards the end of January, you start to get company results coming out. I know there are some good ones this week, and then from next week, then the big tech starts reporting and stuff. So I think we're going to see fantastic earnings coming out from the American companies and from the South African companies. Um, I think both markets are going to obviously increases in earnings will make the share prices go up in general. So I think that'll be a catalyst to let the markets run. Obviously, when they decide to actually, like say in America, the interest rate story, when they decide to explain that it was non-permanent jobs that caused the rise. Look, also there's a lot of issues. There's a lot of geopolitical tensions and stuff like that needs to get sorted out. Hopefully that doesn't descend into chaos. But yeah, the thing about investing is you invest for the long term. So people are looking too short term. They're looking like if they buy today, is it going to go up tomorrow? And which is ridiculous. I mean, it doesn't matter what the stock does in a week, a day, but it matters what the stock does in 10 years' time. So you've got to look more long term. You've got to, if you're not in the market yet, now's a good time to start slowly getting involved. You can slowly dollar cost average or rand cost average into the market, start building up positions. If the market comes down, you're gonna get a cheaper price, which is better. So yeah, that's the best thing to do. If you already hold positions in the market, now is a good time to start accumulating more shares. So in other words, reduce your average costs on your shares. It's better to just add money every month into the market, and no matter if the market's up or down, you'll actually do well over time. So that's one way of not having to worry about the market in general. So yeah, keep paying in. Pay in set a limit for yourself. I'm going to pay in so much per month. You pay in that, and you invest it into companies. I try and have a spread of dividend stocks and growth stocks. If you look at, for example, the US tech, some people are saying it's a bit overpriced. We have come down a little bit, but I mean, if you look at forward earnings on the tech stocks, I mean, like I say, Nvidia's year end is end of January, so they're reporting on the 20th of February, and their forward PE is you're probably looking under 30, so it's in line with the market. Plus, obviously, when the companies come out and they increase their earnings, especially if they're increasing more than the analysts thought they would, if they increase earnings, then the PE ratios start to come down. So the more the companies can increase earnings, then the better. Yeah, then the better for the stock market in general. But I think we're going to have some good earnings coming out of the bigger companies, and even the medium and small caps. Small caps seem to have actually been neglected recently. They've actually been down. They've been down recently, but small caps will usually follow the big caps on the way up. So yeah, it's also very worthwhile accumulating small caps at this stage. There are some small cap ETFs, like in the American market. Even the South African market, there's mid caps. I think there is a small cap that you can look at ETF, but I know there's definitely medium mid caps. The American market, you've got VB, which is the Vanguard, and you've got IJR, which is the iShares. So you could look at slowly investing in them, and over time you'll see a nice increase. But yeah, I think that people's outlooks definitely seem too short term. They're not seeing the bigger picture. If you look at, for example, the new technologies that's come in AI, you look at Nvidia as a leader in AI, but a lot of companies are benefiting from AI, and they're going to use it to make more profits. They obviously have to spend on it, but most of the spending that goes on AI, a majority of it goes to Nvidia. So Nvidia is really going to collect the, and also they're going into robotics, and they're going into a lot of things, quantum computing, which they'll only see benefits in the future. But that's how they think. They think into the future, and they're highly innovative. And the big American tech stocks think of that. They don't think of just the short term. And investors should do the same. Investors should think long term. They should think now. The way I look at it, the next 2-3 years is the buying time. This is now the time you should be buying, building up, accumulating. The next 2 or 3 years, accumulating, and then when the market runs again, then you're looking at a very healthy profit. So stay in there. Don't hold on. Don't get spooked. Don't sell off everything. You got some shares. Look, you look at a share like Palantir. Palantir's got a very high PE ratio, so they've got their earnings has got to increase dramatically to pick up to the share. So there's a lot of future growth priced in already. So it has come down a little bit. So it's maybe worth nibbling at these prices. But yeah, and see how it goes. If it does fall further, you can pick up more. Um, yeah. So, but that is one that looks a little bit overvalued. If you look at purely at PE ratio, but they have such good things in the pipeline. Um, Talking about pipeline, a good sector is energy stocks. Even moving over to electric vehicles and stuff, there's still going to be a big demand for oil, gas, um, also the utilities and stuff. With all the new data centers that's going to come up for AI. I mean, Microsoft said they're going to spend 80 billion on AI infrastructure and that. So yeah, there's going to be a big boom with that. Yeah. So keep tuned, and let's see how we go. I'm quite positive on this year. Some people say, is it going to be up year, down year? If you look, 2021 was a down year. No, 2022 was a down year. 2023, 2024 was up. 2025, let's see. I think it's going to be another up year. Most bull markets run for 5 years, but yeah, if it's a up year or down year, if it's a up year, that's great. If it's a down year, then it gives us longer time to buy in. We have 1 year, maybe 2 years of down, and then we're going to be back on the ride to the moon. So yeah, yeah, it's yeah. You've got to be patient. You've got to be a long-term investor. You've got to be buy in, hold, and accumulate. Add to your shares with the dip. We've seen a few dips recently. Just keep buying in on the dip, and you'll do well over time. Yeah, there's no big worries about if inflation does go up and they decide to raise interest rates, then they'll raise, and then it will another year or two, then they'll drop the interest rates again. So it's what comes around goes around. So yeah, so stick with it, and yeah, well, let's. I think 2025 is going to be a good year. Most of the analysts are saying the S&P is going to end between 6,700 and 7,000. Often, yeah, I've heard about 7,000. At the moment, I think we're on about 5,800. So, yeah. And obviously, the Nasdaq is. I think tech will stay the leader, even after a pullback. It just makes it more enticing to buy. Okay, so thank you very much.